Fed's big interest rate decision. What to expect. Welcome to Trend Talks with Jenny and Joey. I'm Jenny, and this is my co-host, Joey. We're here to dive into the latest trends and hot topics from around the world.
That's right. Today, we're going to talk about the Federal Reserve's upcoming interest rate decision. It's a big one, and markets are buzzing with anticipation.
Absolutely. The Federal Open Market Committee is expected to lower its benchmark overnight borrowing rate by a quarter percentage point on Wednesday. That's a significant move, considering the economy is still growing at about a 3% pace.
And the labor market is holding strong. Yet, inflation remains stubbornly above the Fed's target of 2%. The Fed's preferred inflation gauge, the Personal Consumption Expenditures Price Index, is expected to show a slight increase in November.
Right. So, why is the Fed considering a rate cut? Some argue that policy doesn't need to be as restrictive in the current environment, and they don't want to risk damaging the labor market.
But others, like former Kansas City Fed President Esther George, believe it's too early for a cut. She suggests waiting to see how the data comes in. George argues that a 25 basis point cut usually doesn't make or break the situation, but is a time to signal that the Fed hasn't taken its eye off the ball of inflation.
That's an interesting perspective. If the Fed does cut rates, it will mark a full percentage point reduction since September. Yet, Fed officials have tools to indicate that future cuts won't come so easily.
One of those tools is the dot plot matrix, which shows individual members' expectations for rates over the next few years. The Fed might also use guidance in the post-meeting statement and Chair Jerome Powell's press conference to provide further clues.
And don't forget, Powell is likely to be asked about how policy might position in regard to fiscal policy under President-elect Donald Trump. The incoming president's plans for aggressive tariffs, tax cuts, and mass deportations could aggravate inflation even more.
That's a tricky situation for the Fed. They can't change their forecast in response to political changes until they're sure those changes will happen. But they might move the forecast more if Trump's policies are actually put in place.
Most Wall Street forecasters see the Fed raising its expectations for inflation and reducing the expectations for rate cuts in 2025. The dot plot might show fewer cuts next year, and the Fed could skip the January meeting.
Officials are also likely to raise their estimate for the neutral rate of interest, which neither boosts nor restricts growth. This rate has been creeping up in recent months and could cross 3% at this week's update.
Finally, the committee may adjust the interest it pays on its overnight repo operations in response to the Fed funds rate drifting to near the bottom of its target range.
It's a complex decision, but it's crucial for the economy. We'll be watching closely to see how the Fed navigates this challenging environment.
That's all for today's episode of Trend Talks with Jenny and Joey. Thanks for tuning in, and we'll see you next time.